Welcome to the channel. On this channel, I do trading, market analysis, and along with that, a little bit of personal finance. So, welcome to the stream. For today, the market is currently on. So, I'm going to share my thoughts about the current market and maybe take a couple of trades, and let's see what how the market rewards us. Okay, so uh, for this reason, let me share my screen. Woohoo. Yeah, I hope my screen is visible. So firstly, let's just have a look at the Nifty chart, and today we are having a beautiful rally. The market opened at around 24,350, and from there, basically a gap up opening, and from there it went a little down, but since then it has been regularly rising. So to look at the situation how it is, let's go to monthly chart. All right, yeah. So we saw 10% fall in the Nifty, and since then the 23,300 level was tested, and since then we had a great rally when the Maharashtra election came out on that weekend, and since then the Nifty was taking resistance at 24,350 and such a level. But today, apparently, after a lot of days, the that level has been broken down. Now the Nifty is trading at 24,450, probably going to test the 500 level. And so, what else is there? Basically, fundamentally, if you look at our markets, um, this quarter the financial results have been really bad, barring a few companies. It has been really bad. So the market is not like the fundamentals are not looking that good. uh, Recently the GDP numbers came out. They were also really bad, but what the screen is telling us is that that is a thing of past, and even though the fundamentals aren't that good, the future seems fine. I mean, so basically the market is saying to us that all the bad news has been discounted. Whatever had to happen has already happened, and from now on it is just the new news that is going to come. So we have to be focused on that. Let's come back to today's daily chart. Yeah, so I mean the market opened up on a gap up, fell down, filled the gap, and since then it has been rising. Other thing is, so why the market was falling? Because the FIs were selling, but like from past week or so we are seeing that the FI selling has reduced, or it has become a little bit volatile. Couple of days there has been buying or neutral sort of thing from neutral sort of activity from FIIs, right? So yeah, so now where is the Nifty going to go? To 24,000 once again, or 24,000 once again, or it is going to go to the 25,000 level? So that is for the market to tell us, but we can just we can just try to estimate and speculate. So that is on the fundamental side and the FI selling. Speaking of FI selling, let's have a look at the numbers, right? How is FI selling looking like? Uh, let's go to this website Stock Edge, and well, what? Uh, yes, let's go to the numbers. Okay, so this is how the FI selling activity has been. Yesterday there was almost zero selling. Since and before that it has been continuously uh, up to 5,000 on an average. in November we saw huge selling, like every day is red here. It was consistent. A couple of days it was too heavy, but other than that, if we see on November 25, a buying came out, but that was because of the MSCI rebalancing. So we can omit this one out. But other than that, I mean, yesterday also the selling wasn't that much. And the thing is, it is a notion in the market that generally in December FIIs go to holidays. So most of the funds, they don't participate actively, and um, that's how it plays out, but it's not a definite thing. So on the flow side, it seems like things have eased down. Another big factor is that today and yesterday, it was the start of December month, right? So another theory is that, since salaries have been credited a lot, so in the first week of every month, the retailers come and put their SIPs or put their investment. So for that particular reason, the the inflow is really good, and for that reason also the market is rallying. So what is my view? So as of now, I'm not really able to decide whether the market is going to go up or down, and that is how a trader should always behave, because there is no guarantee on the uh, in the markets. There is no guarantee. So but still, if we want to have a trade, if I want to have a trade, what I am thinking about is, I'm just sharing my thoughts out loud, is that it's true that all the bad news is is here in the picture, and the flow wise, the market is looking positive. Technically, if we see, since a breakout has played out, technically the market is long, and for that particular reason I'm looking for short opportunities. But I'm not really comfortable shorting at this particular level. My long term view is that in uh, in like 1 or 2 months, the market is not going to run away to 26,000 level or such. The market is very much neutral. It is going to play between 25,000 to 24,000 for a long time. So I'm thinking like, uh, I'm looking for shorting opportunities closer to the 25,000 level. So that is my market view. I will obviously today take a few trades. So for that reason, maybe let's have a look at the option chain. Let me have a look at the option chain of Nifty, and I'm looking. Let's switch it to December. So I'm not somebody who is going to buy a lot of puts uh, or calls at any time. I prefer selling out of the money options, but it all depends on the price. So let me see what opportunities are there. Okay, so let's come to 24,500 level, which is the current level. uh, See, the call premiums are way higher than put. So I mean, if anybody is thinking to buy calls at this level, because the market is looking long, they have to pay a lot of premium, and I don't see any positive side on it. Like like currently the market is trading at 460, right? So 450 is the level, and look at the gap in call and put. It is more than 130. So where is it meeting? Where is it meeting? It is meeting around this level. So currently the market is already discount 24,600 level. Market is basically saying that 24,600 is the current level, right? So I mean, that is it. So the rally is expected. So another thing is, so what I am thinking about is 25,000 level. So selling calls at 25,000 is what I am looking at, but 136, it is a bit risky, so nobody should do it. But how about I create a position where 24,800 is 24,800 is the level where I can short, or 25,000 also is fine. So another interesting thing is, if we see the current level is 24,500, so 500 level 500 gap is there in 25,000 strike, and the puts available are at 550. So basically 25,000 minus 556, 24,500 or 24,450, that is the current level. So in this put, in the this is basically in the money put, there is no premium actually. 560 is the premium, and that is what the level is suggesting. So there is no additional premium. So if somebody buys this sort of put, the option decay will be not there. Okay. And if really I look at 24,500, it is discounting a level of 24,200. So there is a lot of decay possible here. And let me look at 24,700. So see, from this level where the put premium is 300, we move upwards of 200, 200 level, 200 difference we have moved, but the premium has only moved to 90. All right. So I'm thinking of a strategy where, I can buy this put because there is no option decay available here, and sell something like this. So in that case, what will happen? Let's try to understand what will happen. On the net, I will be paying around 180 put premium, right? 180 put premium, and the gap which I am getting is 300. So this is sort of a bear, what is it called, bear put spread ratio. Yeah, this is bear put spread ratio. In that, you basically sell double of this and then buy this, but I'm thinking to just buy one of these. Or if I go to 25,500, we move another 500 and we get 400. So there's no juice there. All right. uh, let me 100 premium is available here, and the gap is 200. It's a prudent strategy actually. So okay, let me just go with it. I will get 120. Yeah. So here's what I have decided. I will actually buy 25,000 put and sell 24,700 puts. Okay. And in this, what will happen? Let's go to margin calculator. Zerodha margin calculator, and let's create this strategy. NFO options, Nifty, come on, Nifty, yes, option type, puts, strike 25,000, let's say 500, let's say 1,000. I'm going to buy, and then 24,700. Yeah, 24,700 I'm going to sell. Woohoo. Okay, so yeah, so I'll be needing around 5 lakh of margin. The position is with 1,000 quantity. Okay, and what is the upside and what is the downside in this? The downside I see is that the additional premium that I am paying. Okay, let's come back to here. This is 390. 567 minus 390, so around 180. So 180 into 1000, that will be 1.8 lakh. Yeah, 1.8 lakh of premium I'm actually paying. And what is the positive side? If the market stays below 24,700, this, let's say it settles at 24,700, the market, uh, so this premium will become 300 and this will become 0. So I'll be getting 391 minus 270, so around 120. 120 is my upside and 180 is the downside. Okay, so it is yeah, it is 33%, 33, so 3 is to 1 is the risk to reward ratio, but our break even will be at around 24,900 or something, 24,850. So that is the sort of trade I am willing to take. So let's take it, let's go, with, okay, so the numbers have changed, uh, but still it makes sense. So let me sell 500 worth of these options. Oh, sorry, I had to buy this. Yeah, I need to buy this and sell this one. Sorry. Yeah, 500 or 1000. Let's go with 500. Let's go with 500. 560 is the price I'm quoting, and the order is already completed. So let's quickly sell this. 382, 382.5. It's fine. It's fine, fine, fine. Let's see that the order gets placed really quickly. What are the bids? 281. Okay, let me change it. I don't want to wait at this because, okay, yeah, fine. So the trade has been placed. I had this position previously as well. So let's have a look. Let's have a look at the entire position. Okay, yeah. So this is the position as of now. And yeah, this is the graph. This is the payoff chart. Okay, so if we ignore this blue line, the red line, the dashed red line, that defines the position on the expiry date. So if nothing happens and we just move to this, we'll be getting the maximum projected profit. So here I actually have 24,500 PE and 24,700 PE sold, and 25,000 PE is bought. That is around 2,000 quantity. Let's look at our break even. The break even is 24,750. If the market stays below 24,750, I'll be in profit. If it is more than that, then I'll be in loss. So this is the kind of strategy. Okay. Theta decay is coming around to 2500 daily. Let's see how it plays out. So that is for today's trade. Now let's have a look at a couple of stocks and a few other things. All right. Yes, one thing was Map My India. It came into news, and what are we observing here? So it is falling down, and it is down around, okay, so yesterday it was down, and today also it is down. So from 1750 it has come to 1540, basically around 15% down. Yeah, 200 points have been lost, 12 13 points down. So what happened in Map My India? What happened was, the promoter of the company, Rohan Verma, So I am assuming that everybody knows what Map My India is. Map My India is basically just like Google Maps. It's a company which operates mostly in business to business. So they have tie-ups with auto companies like Tata, Mahindra, Bajaj, and all of that, and they sell their maps to them. Um, so it has been a business to business company, and now the promoter Rohan Verma decided that he is going to start a new venture which will be a B2C venture, but not in the company itself. He'll be creating a startup independently, and the funding will be taken from the Map My India, the existing company, and 90% of the stake will be with the promoter himself. The promoter is going to Rohan Verma is going to step down as CEO from Map My India, and he'll focus on his startup. So whereas basically the shareholders were, given a lot of promise that this company is really interesting. Now that all the juice has been sucked out of the company is trading at 80, 100 price earning multiples. It has become a like famous name, and now the growth opportunity comes up, which is in B2C, and now the promoter is showing the middle finger to shareholders and saying that I'll keep it independently, where 90% of the stake will be in my personal name, and the Map My India shareholders will only get 10% stake. So this is a corporate governance issue basically. uh, this is really really interesting. I mean, the retailers are being made fool in this situation, all the shareholders basically, and for that reason, I mean, the stock is down a bit, uh, more than a bit actually. So now let's have a look at what the news is coming out, huh? Okay. Yes, so here's Rohan Verma. Okay, so a new statement has come. Map My India will not invest rupees 35 crore in new B2C venture. Okay, so previously he said that for the funding of the new venture, Map My India will basically invest 35 crore, and Map My India will get 10% stake. Okay, and he'll get 90% stake, and so now he has given a clarification that the Map My India will not invest this 35 crores. But what he needs to understand is this is not about the 35 crores. This is not about this investment. The problem is corporate governance issue. Basically, a growth opportunity has come to the company. Why does he really need to create a new venture? Just create, just have a subsidiary of that particular this company only, so the shareholders get rewarded. 35 crore is not the issue here. Okay, so I mean, why when a growth opportunity comes, you have been making promises that so and so will happen, so and so will happen to the company, will grow this much. But when the growth opportunity is coming, you are not letting the shareholders uh, enjoy it. So I mean, this is really disappointing. If like if such ventures will be played outside the business, and the shareholders will not be able to participate, then like it's really bad, right? Why were the shareholders so interested in your shares? And now he's saying that he'll resign from uh, as CEO from Map My India, and just focus on the new venture. So that is really disappointing. uh, and for that reason, I mean, the stock is falling, but let's see what happens. um, yeah, so this clarification is that even though Map My India will not fund, Map My India will get 10%. But why should Map My India get 10%? The entire stake should be in Map My India's hands, right? So I mean, that is the news for Map My India. Let's see what other news is there. Let's have a look at Cochin Shipyard. That is also a favorite stock of retailers like me and like everyone else. It was in Oh, it is trading now. It was in circuits. If we see, yeah. So from almost 3000 level, it came down to 1250, and from there it was in circuits for quite a time, and now it has started trading. So I mean, classic trap for many. Not so. Basically, what has happened is in these sort of stocks, whatever the growth was, um, because of the government push and because of capex reason, things are not playing out really well. Let's have a look at the fundamentals of the company. Cochin Shipyard. Sorry, clicked somewhere else. Let's have a look at Cochin Shipyard 10-year chart. Woo. It was just neutral for quite some time, and in recent times it has moved exponentially. Let's have a look at the fundamentals. So the revenue for most part has been neutralish, but it has shown some upside movement in recent past. Obviously the government's focus is on defense, but another thing is this is a PSU with, you know, okay, just give me a second. Little problem here. Just give me a second. Hi, hi. Uh, so a PSU company grew too much in the recent past, and I mean I don't have much to say about it. It still trades at 50 price earning multiple, and with it being a PSU, it is not very comforting. Let's see how this stock performs. Uh, is there anything else to discuss though? Let's just keep looking at the Nifty 50 chart, right? Um, Not much is happening. Not much is happening. Honestly, so my take again on Nifty for this current month is that yes, domestic flows are going to be strong. All the bad news has been discounted, but to go further up, the market needs some trigger. Either it has to come from US or like, so quarterly results are not going to come till January. So what else could be there? There is RBI monetary policy in next 2 days, so that is also an event to watch out. I mean, it has to be some event, otherwise I don't see the market breaking down 24,800 or 24,700 level. um okay, okay. So large cap stocks are showing a little bit of buying, right? Let's have a look at Reliance is in a good zone. uh, so it came down to 1220 level where the market cap became close to 15 lakh crores. So it became too low actually. So from that level it has now risen to 1322. If you look at the year to date chart, it is still in you know a lot of pain, to be honest, because in large cap stocks nobody imagines that such sort of fall will be there. So that is one thing. SDFC Bank is playing really good in the past few weeks or months. uh, yeah, so from this particular level, from 1400 level, whoever invested in SDFC is enjoying. uh, these are sort of stable stable companies, really great franchise SDFCs. It's trading on all time highs after so many years, and that is actually pushing Nifty as of now. SDFC Bank has become the market leader for now. uh, Really great. So since I don't have anything else to do, all I can see is Nifty 50. Let's have a look at the smaller chart. Um, yes. So yeah, I mean today's top I think has been made at 24,475. So in next few days we can expect to keep it hovering around 24,500, testing out 24,500 actually, because that is a resistance. Let's have a look at the option chain again. uh, we'll look at OI this time. Okay, so obviously the max pain is on 24,500, but look at the number of calls. And I think today's or yesterday's rally would have been a lot of short covering actually, because there were a lot of shorts and those have been covered. So if we see, the puts are higher, 44 lakhs, and call is 34. So the put call ratio, which uh, is a great indicator. It is it is suggesting that the puts are heavy, and for that reason the market is really bullish. Another level is 25,000. So at 25,000 there's lot of call writing. 43 lakhs, it's great. So I mean, it is really hard to break this particular level, and on 24,000, puts are too much, 60 lakhs. So that is also a great level. So 24 to 25,000 is the medium term, short term range where the Nifty is going to hover around, and where 24,500 and 24,800 are levels to look out. Now that the 24,300 level has been broken, I see that this is going to become a support in some time. It can become a support. Let's see how it plays out. In the December expiry, there are still 23 days left. 23 days are left. And okay. Well, I mean, that is it for today, I guess. Nothing more to discuss. Let's have a look at idea share. Again, idea is another one classic example of retailers being getting trapped, because it it came up to 19 level, and from then it has been a disaster. The problem with idea is it's not going to, I don't think it is going to become profitable ever. So whatever the current price is, this 8 rupees is just because of the brand it has, because people are just holding it, and they don't want it to die, so it is just on ventilator as of now, and I don't see any plus side. If we look at the financials of it, it's really disastrous, honestly. Still 57,000 market cap, so that is a big large cap company even at 8 rupees price. Okay, and see see with depreciation, interest cost, it is in loss, and the loss is 7,000 crore. That is almost closing near the sales. So unless this debt goes away, even after that, so even without any interest, if we leave out the 2 lakh crore debt it has, even after that, uh, it is not going to become EBIT positive. And I mean, if and given that the debt is there and such a huge amount of debt, what is a possible way to make this survive? The only thing is, if promoters infuse a lot of money. But I mean, 2 lakh crores, even Birla, Kumar Mangalam Birla is not going to do that. So I mean, this is out of hand. It has to someday, other than like some magic happening, where people were expecting recently that the Supreme Court will give some relaxation on dues and all, like the debt goes away, and the government really pushes that the Geo Airtel monopoly, duopoly has to be broken, and idea needs to be there. Some you know some party comes in as promoter. Other than that, there is no hope. So that is the hope on which the market is still giving 8 rupees of the stock and like 57,000 of market cap. Otherwise, this is a company which is going to go to zero market cap is where it should be. But still hovering, and people are really trapped into it. um, let's look at the balance sheet. uh, what is actually the debt? uh, yeah, so more than 2 lakh crore, this is sort of the debt it the company has. Even the market cap is not able to justify this. How can and with no cash flow actually being generating, so this is only getting increased. So let's hope something good comes out of it, but mostly retailers are trapped in this. uh, Other than this, I think today's market is about to get closed. Just half an hour remaining. Uh, let's come back to Nifty. Yeah, let's have a look at this chart also. The daily chart. We saw a head and shoulder sort of pattern uh, was getting created here, and we saw the fall till 23,500. So I mean, in the long term, 26,500 is a big hurdle, and 23,000 is the big hurdle for 25 actually. So I mean, because the fundamentals haven't been so good in the recent past, and it is not going to change drastically. Yes, new budget will come, RBI policy will come, some maybe interest rate cut will come. All these things will play out, but not much of a trigger in the recent future. Okay, all right. Uh, so I'm going to stop from now.